Welcome to Trading Nation. I am Courtney Reagan. Thanks for joining us here today. It has been quite a week with this sell-off that we have had and then the buy back in. Volatility is a word that we have heard many times battered around as we're talking about what's happening in equities as well as, hey, in markets like Bitcoin too. Paul Hickey is joining us, which is a good thing. You know, he's the co-founder of Bespoke Investment Group. He helps us make sense of what's going on in the markets, taking a good look at the charts. So I guess, Paul, first of all, I'm going to ask you, is the market broken here? Is something wrong? Treasury Secretary Steve Mnuchin says, nope, things are functioning normally. Didn't feel so normal. It felt pretty abrupt to a lot of investors. What does the market tell you right now?
You know, I don't think anything's broken at this point. I think what it is we had such a period of low volatility that, you know, a pickup in volatility really shocks the system, so to speak. And it seems abnormal but compared to other periods, we've seen these types of pullbacks and big spikes in volatility before. And I think it's more of just a reality check for investors who become so, you know, almost feel like 5% monthly gains are a God-given right. And confidence just became very enthusiastic. And this is just the market keeping people honest here.
But fundamentals are fairly strong, I would say, at least stronger than what we saw in the most recent Great Recession, of course. I mean, why the sell-off so suddenly? I think we understand it had to do with some of these exchange-traded notes, the inverse ETF. So if you're an investor, how do you prepare for something like that?
You know, I think the only way you prepare for it is knowing that these types of things occur from time to time. You never know exactly when they're going to come. But again, like, you know, we had a bunch of small individual things that together made the market a lot worse. And then in the backdrop of very strong sentiment. So we had rising interest rates. We had concerns over inflation. We had pension fund rebalancing. And then we had the short volatility ETFs blow up all in the span of about a week. All those things came to fruition. And that on top of a consumer that was more optimistic towards stock prices than at any other point in history, just gave these weekends an excuse to sell. And I think this pickup in volatility that we have seen, it's likely to continue for the short term here. But I think in all the studies that we've looked at, when you see these types of movements in the market, as long as you have a relatively strong stomach, it has paid to stay long of equities and to maybe even take the opportunity on some of these weak downdrafts to buy.
It's a sentiment we've heard from a number of guests across our platforms on CNBC. If you can handle it, this could be a good buying opportunity. That is at least the thought of several experts that watch these kind of things. Let's talk a little bit, if we can, about Bitcoin. This is a market I think we're all still trying to understand and get our heads around. We certainly don't have a ton of historical data. We had this incredible run-up in the fall going into the holidays. And then we've seen a pretty big pullback. What do you make of the action here? And what do the charts tell you about how investors should think about it going forward?
So I mean, first of all, Bitcoin and the cryptocurrencies are extremely volatile. So they had a really strong 2017, and then have pulled back. You know, lost more than 2/3 of their value at the lows earlier this week. Believe it or not, that hasn't been completely unprecedented for Bitcoin. So if you look back through history, there have been other periods where it's seen very large declines like that. As far as extrapolating that into the overall equity market, I don't know if you can make a real strong correlation there. But you could look at the big run-up we did see in Bitcoin and just highlight that as another example of overall consumer and investor enthusiasm. And so in a strong market, people tend to take more risks, and they moved into some riskier assets and, have learned a painful lesson that what goes up also comes down.
I think some of your market lessons there, I get it. You can't necessarily think that you're always going to get this 5% return forever, but basically the fundamentals are fairly strong. And in the long run, things should turn around for equities. That's at least, I think, the opinion that you're trying to give us here today. Paul Hickey, thank you so much for joining us today. Paul Hickey, co-founder of Bespoke Investment Group. That's going to do it for Trading Nation. Thanks so much for joining us. I'm Courtney Reagan.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.